Welcome back to Rockstock Channel. It is Friday, January 26th, around noontime. Rodney and I have just concluded our third week in a row of having 4 or 5 meetings a day on Zoom with industry insiders at producers, developers, traders, both physical and derivatives traders, sell-side analysts in Asia, Australia, Canada, and the US. And we've had news this week from Pilbara, Minres, and Tesla, and also a bit of news of Sayona. We're going to cover that, but we haven't yet heard news from Albemarle or Arcadium. Albemarle, I think, is producing their results on February 15th, and Arcadium on the 24th of February, and those are relevant because we haven't really heard about what, if at all, they might do with some of their mines in Western Australia, namely Greenbushes, Wodgina, and Mount Catlin.
Before we start today's video, we'd like to thank Lithium Royalty Corp, listed on the Toronto Stock Exchange, ticker symbol LIRC. We'll share more later in the video.
You have a view. I want to start there. Rodney, I think you've said in some of our earlier videos this year that this year is very much one of kind of supply cuts, supply discipline, in particular out of Western Australia. Pilbara, didn't do anything. And Mineral Resources said that even Bald Hill, which we thought might be a candidate to come offline, he said it was, even that was profitable, although the whole dynamics of Bald Hill, he did provide a lot of detail because there are some still kind of murky undertakings with their, liquidators or bankruptcy administrators, et cetera. But, your thoughts on what we might hear from Albemarle and Arcadium, when they report.
Yeah, I guess just to cover quickly on the demand topic, I do think that if sell prices are cut and go down to something in the order of $50 per kilowatt hour for LFP in the second half, that could trigger, some additional demand. Definitely on the ESS side, I think that would make it a very competitive supplier of power. So, that might be a surprise. I don't know to what extent, but just on the demand side and possibly even for EV. But with respect to Greenbushes, the agreement as it stands is between Albemarle and Tianqi IGO is no one sells spodumene direct, which means if that's the case at the moment, Tianqi has by my maths between 55 and 60,000 tons of downstream conversion capacity, but they get somewhere in the order of 90 to 100,000 tons of chemical grade spodumene from Greenbushes, which means they have an excess of 30 to 40,000 tons that doesn't have a home. If you were to do tolling, I think those economics are very tough at these lithium prices, even with getting the spodumene at whatever the costing is. If they were to adjust the formula, I think it's very much touch and go if you're paying someone else a margin to do the tolling. So if you do that mass, what does that mean? What does it mean for Albemarle that also does quite a lot of tolling? Unless you are delivering into term contracts at premium prices, which I don't think Tianqi is. Albemarle might, but I'm not sure on all of it. So there's definitely a case, unless they change the agreement between the parties, that there's a potential for, instead of just building up inventories there, which I don't think you can do indefinitely, and looking at where spodumene prices have gone since IGO flagged that, there's a fair chance, that it would make commercial sense for both those parties to agree to cut back on Greenbushes volumes. How much depends, as I say, on what the contract pricing looks like on Albemarle's side for tolling. But on Tianqi's side, certainly 30 to 40,000 tons LCE equivalent. So, between the two of them, if Albemarle were to match, that would be a significant cut.
That would be
Mount
like 20
Cattlin,
to 30%. That would be like 20 to 30% of Greenbushes production or
more.
so.
So I'm saying, I mean, if it were 30,000 tons they cut back, that would be 30%, give or take. They both agree to that.
Okay. In spodumene terms, what's the production rate of Greenbushes now? 1.5 million ton?
Yeah, somewhere around there. I had slightly higher, but remember they do some technical grade. They do for glass and ceramics that they sell. So for chemical grade, let's, for simplicity's sake, say 1.5 million tons was the plan. So you could take 450,000 maybe of that offline.
That
I
would
don't
be
know that it would.
huge. That would be a gigantic slowdown.
It would. I don't know what it would mean for operating costs, but I don't know that it would be that bad. Now, that is obviously a dream scenario for the market. Everyone would owe them a fruit basket if they were to do that, because that would be a lot of volume. So
Are you
we'll
listening,
see. I mean,
Kent Masters and Eric Norris? This is a way to be disciplined and balance the market.
look, again, they could take a different view and say it's time to put the squeeze on other marginal operators and agree to sell spodumene direct and be ruthless. But to my mind, it would, the obvious takers for that, as we know, the conversion capacities in China, which means they convert and then sell into spot, which puts more pressure. And that can only be bad for both those, for Albemarle and Ternshi to allow that to happen. So let's see. It's the only way that you could see the low-cost producer in the market actually being the one cutting back. As far as Mount Cattlin goes, it's got a small resource left. They use contract mining. Why would you produce to break even if you're running through what is a small and short-dated, mine life? Makes no sense, but they'll have to decide. They've cut 4. I don't know what their agreements look like. To produce, to stand still and make no money also makes no sense. I don't know what costs are involved to send everyone home, but I think with a certain amount of lead time, they could do that. They're not the only ones. You've got Core, you've got North American Lithium. So there's a few parties that I'm sure are
Sayona had a
running.
press release. Sayona fired Guy Below, who was at the Canada Rocks conference last year. James Brown is, does he have another Altura on his hands here?
We'll have to see. I guess it's, what are the costings to ship it? What are the, the margins taken by the marketing or what have you, and what's the net price? I don't know. We'll see what they have to say. Again, you need, I think, quite meaningful supply to come out of the market to send a warning shot across the bow. But there are some obvious projects to look at. I don't understand how, given, it's a landlocked country and what have you, how Zimbabwean material stays competitive at these lower prices, given it's got to either, it's got to travel across quite some distance to get to port and then be shipped. So let's see how they hold up. Again, we saw some big export numbers out of Zimbabwe to China in late last year, but the decision to mine that stuff wouldn't have been immediate. It would have been earlier when prices were still somewhat higher. So I think I'll be very interested to see imports into China between Oz and Africa and elsewhere. It's interesting to note that Australia has gone from 100% of imports into China down to half or just over half. So really it has been the rise of other players, but we hear different things. Let's see how those hold up. And then of course, I'm still struggling, from a maths perspective, to understand how lepidolite in China can be competitive and operate and go lower from these levels when Ganfeng and others overlooked those projects. And, some of them have very low grades and some issues with impurities and so on, and needing to move waste rocks. So that's the thesis. Lithium prices shot up. The IRA in Europe was doing saber rattling, and China responded, went out into the world, secured various projects, brown, and got some hard rock going. And, they've got a liquid futures market. There is some debate over delivery that we had about whether it was meeting spec. But, the open interest is big on the Guangzhou futures. Whether that's speculation or genuine sellers will remain to see, but it is physically settled. So, China has responded very quickly to the geopolitical, threats. And we know that exports, if you look at what the production targets are of Chinese EV brands for this year versus what they expect to sell in China, the read through, the look through is, you can expect big exports out of China for EVs this year into rest of the world and what they can do in Europe. So, if you take China's percentage of domestic EV sales as a percentage of total sales and exports, China is flexing right now, big numbers.
They certainly are. I want to cover the Tesla conference call a little bit, but one of the things you said is that if it weren't for import tariffs, they would decimate all incumbent auto OEMs. Before talking about that, you mentioned the Guangzhou futures. It's also come to our attention this week that the CME, the Chicago Mercantile Exchange, has lithium hydroxide in a $5 contango. Spot's $14, and 1 year from now is at $19. So the derivative of that, or if you translate that into spodumene tonnage, the market is becoming more liquid, and we're seeing that there are some players who are active in that market looking to utilize some hedging mechanisms that might be applicable to some of the spodumene producers out there as some sort of financial vehicle. What do you make of that contango dynamic? What's the market telling us there?
Again, it's a cash settled exchange, but what they're saying is, we were in backwardation when it was at $80 a kilo, and now we're in contango when it's down at these levels. So that's an interesting one, with the reference point being, again, it's an ex-China reference point. What is interesting is when I looked recently, I don't think it's changed, is that the China exchange is also in contango now. So that's a ray of hope. In that, you're not seeing, backwardation from very low levels. So, looking slightly better. So that is encouraging, but, again, it's a question of who is using those futures. And I guess if I were an OEM and I would want to, or anyone downstream, I'd want to hedge, even buying forward. When I had a look at the CME, I think some of the back end of 2025, I think is $20. That's still, that's still really cheap. So if you look at that as a look through, if you secure your own lithium supply and factor that into the battery cell costs, that's competitive. So I would happily, is $20 reinvestment? Is that enough reinvestment economics, even for someone like an Albemarle or whatever? I think if they want 2 times whack, it isn't. So it's a good opportunity to buy, in the same way that when oil plummeted and, the price was down below $50 a barrel or what have you. It's, a great time, because if you look at it all in costs to produce, that was really low. And I think for lithium, the reinvestment economics isn't, even 20 isn't enough, ex-China.
I agree with that. I think we're more along the lines of 25 is like where market consensus, seems to be going.
Jumping in here from the editing room to tell you about Lithium Royalty Corp. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, lower-cost projects from exploration to production, LIRC covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more, visit lithiumroyaltycorp.com.
We put out this peak pessimism with a question mark at the beginning of the year, and we were arguing we haven't reached peak pessimism, and we still. I saw Altium, took a big hit. Tesla took a very significant hit. I listened to the call. It didn't sound to me so terrible. Wall Street is saying that there was no guidance, change of CFO at Tesla. Maybe they changed the idea of having guidance. So markets don't like uncertainty, but, he did talk about the next generation vehicle, being a 2025, idea. So, it's not this year, but they have 30 billion of cash. Their ESS business was up 125%. There's all sorts of great commentators, on Tesla. I'm not going to go through, all of that, but, the Model Y is the best selling vehicle, globally. The Cybertruck is getting, very good reviews, but it's going to take some time to ramp. But in terms of, Tesla's, fundamental business that, will translate into demand for lithium, I think it's positive, certainly from a 2025 point of view, right? So I'm feeling like 2024 is feeling to me like 2020. Hopefully we won't have COVID, in the next 4 to 6 weeks, or some other pandemic, which locks us, in at home again. But it was this time in 2020, as we were approaching, the BMO conference and the PDAC conference, the market was weak. If I pull up some stock charts of Albemarle, it was quite low. Tesla was quite low. What happened in 2020, there was hype leading up to Battery Day in September of 20th or so of, we thought Battery Day was originally supposed to be May, then it was postponed until September, but the hype started in like August, period. I don't think that there's another Tesla event which will create, that hype, but there's a lot of there was an election in 2020, ongoing throughout COVID. There's an election this year. Pilbara mentioned, Dale Henderson, just from a macro point of view. I wrote these things down. Dale Henderson, during his, just the macro points from his conference call, he talked about, South Korea on December 13th, $29 billion they're spending over 5 years. The EU Commission, $3 billion of battery. That was in December. The USA in November, another, $3.5 billion. He talked about some macro uncertainty. There are 50 elections globally, with the USA, India, South Africa. 49% of the world is voting. So, China EV sales are an all-time record. Global EV sales, I think we're up 31%. So a lot of positives to point to. But yeah, it feels like a bit of a year of transition. But another thing that I'm seeing is like I've become pretty negative on the US, dynamic, because the number of models, that are qualifying for subsidies, the general rhetoric that I read in the Wall Street Journal and elsewhere. But several years ago, this was a China dominated story. It's only been in the last kind of couple of years with Tesla and the Inflation Reduction Act that the US, the sleeping giant was awaking. But the market still very much, is like it was a few years ago. And the demand for lithium, if it just happens to be a China story, it's frustrating because we want it to be a more globally diversified story. But Made in China 2025 was their idea in 2015. We're now 9 years in, and it looks like they're succeeding, in this objective. I joked to somebody that, there was this Who Killed the Electric Car, back in the day when GM, that movie came out because GM had the idea for the electric car in the US, it could be like democracy killed, the electric car, because you have a very, blue state, red state, dynamic, here in the United States, in red state China, not a democracy, industrial policy, very much focused on dominating the battery and the EV industry. And here we are at $50 a kilowatt hour battery. That's half of the $100 that
Huge.
we're getting there. Or how far away are we from that?
No, we're well away from that, but they're saying that, current maths, that's where we could be trending to later this year. But bear in mind that I think benchmark's average is 82. I don't know where LFP is right now. So it would be quite a big drop from, I think, maybe in 70, but it is possible
even
with
so,
lithium prices at these levels.
They had the foresight across the supply chain from all the way upstream. CATL may be subsidizing their lepidolite mines so that they can, continue to make sub $100, dollar a kilowatt hour, LFP batteries that are powering $15,000 cars. And if those cars can't be imported to the US and Europe, then they'll dominate the Indian market and the Indonesian market and other big economies like you mentioned.
There's oversupply. There's oversupply of cells, so there's going to be price competition now. And as I say, that could help. That could help demand in various sectors, but yeah, we need to see what the supply response is. As I said, I'm still struggling to understand how low quality or low grade lepidolite can double production in this price environment. I'm really struggling to get my head around that other than subsidies or some cross subsidization. So we'll have to see how that plays out and how the US and Europe is going to respond, because, again, people point out contract pricing on lithium. I guess my question is on the higher priced contract pricing that goes into Korea and Japan or what have you, where does that lithium go to for cathode and then cell and then EV, and what's the profitability of the EV that has that higher priced lithium in? So we know legacy, some of the legacy OEMs are losing money and some of the new players. So can one keep that up? I don't know, but it does raise the question of how is it that China is able to sell these low priced, EVs at any kind of a margin unless there's some kind of a subsidy. So it's really, geopolitics coming into play.
Yep. And that's been my excitement about this industry since I got into it 15 years ago. The geopolitics of lithium. And related to that is the other news, and we'll just conclude on this, is Ken Brinsden, who we just got off the phone with Blair Way. He's in Quebec, moving his family there. This is, the guy retired, and 2 weeks later he joined Patriot's board, and now he's going to have another bite at the apple with, it's going to be 5-6 years until, he'll recreate a Pilbara, and what is the Western Australia of North America, in our opinion, which is Quebec. And he was mentioning that when he had looked at Quebec and Canada in the past, and there were smaller mines, maybe of lower quality. that's changed a lot. The past year, there have been some major discoveries, and it was interesting to hear from him comment not just on Corvette, but also, Winsome Resources as to, major, significant, thick ore body. They're different beasts than the other mines that exist there. So to our view of the North American lithium triangle from Quebec to Ontario to Carolina, they're partnered with Albemarle. He had some also very positive thoughts to say about, Kings Mountain, based on the relationship, that they had, the relationship they're having with Albemarle. So, North America, spodumene, plain vanilla, spodumene to hydroxide is still very much, a thing. But the James Bay region in particular, and the Corvette deposit, and the Winsome deposit, and some other, players out there that we represent a few of them, like Champion and even Critical Elements, which has exploration upside. Looking forward to hearing what Arcadium has to say about Nemaska and James Bay, projects. But it's a real good testament to see another Crocodile Dundee, actually not just managing a business from Perth, but physically moving, himself and his wife to, do it again. Very few, people, have done this in the industry. And anyway, so that's a positive sign, as is Pilbara and Mineral Resources responded relatively positively to their earnings announcements. So I don't know if the sell-off's, completely complete. We're hearing, lithium prices could fall further from 13,000 to 10,000, someone we spoke to earlier today, based on some of the Zimbabwe flows, but we shall see. Eyes on Albemarle in particular. If they cut back from 1.5 million to 1 million or so at Greenbushes, that would be very, very significant, I think, in correcting the market. So again, Kent Masters, Eric Norris, to the rescue, if you're listening. Signing off. Have a great weekend.